Have you ever pondered over the thought, what is the impact of taxes on my finances? It's a question that may keep many of us up at night, and for good reason. Taxes are an integral part of our financial lives. They play a significant role in shaping our financial decisions and strategies. Taxes are not merely a deduction from your paycheck or a yearly obligation. They represent a substantial share of your earnings that goes to support public services. They fund infrastructure, healthcare, education, and other vital services that we all benefit from. This is a common understanding. But how exactly do taxes affect your personal financial health? They can impact your savings, your spending habits, and even your future planning. Perhaps you've wondered how your taxable income is determined, or how different tax rates could impact your investments. How does a tax deduction differ from a tax credit? How does local tax differ from a federal tax? The answers to these questions can substantially change your financial outlook. A good understanding of taxes can help you plan better for your future, make smarter investment decisions, and even find ways to minimize your tax liability. Today we unravel this complex web of tax and finance. This journey of understanding the intricate relationship between taxes and your personal finances begins now. Let's dive deep and demystify the world of taxes and their impact on your finances. Picture this. It's the year 2017 and the GOP tax bill is passed. This legislation is transformative, bringing about dramatic changes that would affect the nation's tax system. It's not just a bill, it's a revolutionary shift in policy. The tax redefines the parameters of the tax code, creating a different landscape for both individual taxpayers and businesses. It implements crucial changes, such as reducing tax rates across the board. It also ups the standard deduction, an important aspect of taxable income. Additionally, it erases personal exemptions, a significant shift that impacts individual tax liabilities. The bill also restricts deductions related to state and local taxes, a critical alteration for high-tax states. But it doesn't stop there. It also magnifies the child tax credit, providing much-needed relief for families. This bill is a game-changer, altering the tax code significantly. It lowers tax rates for individuals and businesses, increases the standard deduction, eliminates personal exemptions, limits state and local tax deductions, and boosts the child tax credit. Now imagine you're a homeowner in a high-tax state, probably a state renowned for its quality of life, great educational system, and well-maintained infrastructure. You've been enjoying the benefits of owning a property in such a prestigious location. However, you are also aware of the high taxes you are required to pay. These are the sacrifices you've made for the greater good, the ultimate price to pay for a superior standard of living. Suddenly, one day you find an unexpected curveball thrown your way. The tax regulations have changed. You realize, much to your surprise and dismay, that you can't deduct all of your property taxes from your federal income taxes anymore. This isn't just an updated rule or a minor policy tweak that can be overlooked. No, this is a significant change, one that directly affects your fiscal situation. The ability to deduct your high property taxes from your federal income tax was a cushion you had relied on, a financial safety net of sorts. But now that's gone. What seemed like a minor bureaucratic move has swiftly turned into a financial burden. The change, while it may appear small on the surface, is far from it. It's a shift that has a profound impact, potentially reshaping your financial future. This is a significant impact, an alteration that could change the course of your financial stability and planning. A seemingly small change, but with a significant impact on your finances. Now let's shift perspective. You need to understand the immense potential that tax and credits carry. These are not just common terms, but powerful tools that can significantly reduce your tax liability. They are available in an incredibly diverse assortment of forms. You may not realize it, but something as simple as charitable donations can yield tax deductions. Similarly, retirement contributions too can earn you deductions. Have you ever thought about the potential tax benefits of your education expenses? Yes, they too can be considered for deductions. What's more, even medical expenses can serve as tax deductions. And you might be surprised to hear, but even home mortgage interests are eligible for these beneficial deductions. They are all of a broader strategy to make your finances more efficient and to lessen your tax burden. Even home mortgage interest can be a tax deduction. However, remember that not all deductions and credits are up for grabs. It's important to delve deeper into the specifics of each deduction and credit to fully understand them. Some deductions are standard and accessible to everyone, but others are more elusive, only available to a specific group of people. For instance, some deductions might be related to business expenditures. available only to those who own or operate a business. Others might be specifically tailored for students or for certain professions. The idea here is that not all deductions can be availed by all individuals. It is based on the unique circumstances and financial situations of each person. On the other hand, credits can be non-refundable or refundable. Non-refundable credits can reduce your tax liability to zero, but not beyond that, while refundable credits can give you a tax refund even if your tax liability is zero. Furthermore, some credits and deductions are income-based. They might phase out or become less beneficial the higher your income is. This means that high-income individuals might not be able to benefit as much from these deductions and credits as lower-income individuals might. Moreover, others have specific requirements. For example, to apply for an education credit, you might need to be enrolled in a certain course or program. The key here is to understand the rules and requirements for each deduction and credit available to you to ensure you're maximizing your potential tax savings. Lastly, it's crucial to stay updated with the latest tax laws and changes. What's available this year might not be available next year, and vice versa. Staying informed and seeking professional help when needed can significantly improve your tax situation. Voiceover. We hope you're finding this video informative, and taxes can be tricky, but don't worry, we're here to simplify it. Enjoying the content? Then subscribe to our channel. This will unlock a plethora of financial knowledge for you. It can potentially save you a lot of money on taxes and lead you towards financial security. As a subscriber, you'll never miss out on our newest content. You'll be part of our dedicated community striving for financial literacy and empowerment. The journey of financial enlightenment awaits you. Don't hesitate, just hit the subscribe button. Remember, knowledge is power, and in this case, it could also mean more money in your pocket. Let's continue to explore ways of minimizing your tax liability. Well, dear listeners, please don't let anxiety consume you. There are indeed so many more strategic approaches you can employ to trim down your tax liability. One of the most effective ways to do this is by investing in tax-advantaged accounts. These include options such as 401(k)s and IRAs. These unique investment accounts are designed to promote savings for retirement by providing significant tax advantages. Another method you can utilize is by carefully timing your capital gains and losses. This involves making deliberate decisions about when to sell or hold investments, based on the potential tax implications. Moreover, deferring income can also prove to be a smart move. By postponing the receipt of income to a future year, you may be able to drop into a lower tax bracket, effectively reducing your liability. Lastly, you may also consider opting for tax-free investments. Municipal bonds are a prime example of this. These bonds are issued by local governments, and their advantage lies in their tax-exempt status. In essence, all these strategies, in tax-advantaged accounts, timing capital gains and losses, deferring income, and choosing tax-free investments like municipal bonds, can serve as your weapons to keep your tax liability under control. So what's the takeaway from our tax and finance story? This tale essentially revolves around taxes and their sizable influence on your financial situation. The comprehension of their function, their impact on your income and investments, is not just important but crucial. It's like a puzzle, complex yet exciting, where tax deductions and credits play significant pieces. Each piece you successfully fit into this puzzle can potentially keep more of your hard-earned money safe. Imagine tax deductions and credits as secret weapons boosting your financial health. Alongside, tax-advantaged accounts work as safe havens for your investments, offering a much-needed shield against tax liabilities. Then comes the strategic timing of your capital gains and losses, an art of sorts. Mastering this art can be the difference between a healthy financial status and a struggling one. The bottom line here is, taxes need not be your enemy. By understanding and leveraging them, you can keep more of your hard-earned money in your pocket. Remember, every dollar saved in taxes is another dollar towards your financial freedom. It's an essential principle to abide by, a guiding light in the complex, oftentimes confusing world of personal finance. In this world, a dollar saved is not just a dollar earned, but a step towards achieving that financial independence that we all covet so much. This all-important concept of tax savings, of ensuring that your hard-earned money isn't unnecessarily swindled away by the taxman, is a key element in managing your wealth. Not many people fully grasp its importance or know how to take advantage of it. And that, my friend, is where knowledge enters the picture. Knowledge is power, an old adage that holds true even today, but in the context of personal finance, it's more than just power. It's the key to unlocking opportunities, to breaching barriers, and to understanding the intricate mechanisms that govern the world of finance. More specifically, it's the power to better manage your finances. Thank you for joining us today. As we embark on this enthralling expedition, we truly appreciate your presence and time. Our goal is not just to impart knowledge about the various facets of finance, but also to create an enlightened community that understands the importance of financial literacy. Every week we strive to unravel the complex terminologies, the intricacies of the stock market, the secrets of successful investments, and the art of wealth creation. The world of finance can sometimes seem intimidating, but we are here to make it approachable and understandable. You are not just our viewers, but you are an integral part of this intellectual journey. Your feedback, queries, and active participation make this interactive learning experience truly enriching. To ensure you don't miss out on any of our content, we encourage you to subscribe to our channel. Subscribing enables you to get updates about all our latest videos, exclusive insights, and more. By subscribing, you also become a part of our ever-growing community of finance enthusiasts and learners. Keep in mind, knowledge is power. It is an essential tool that enables you to make informed decisions about your money. So, join us in this exciting journey of financial enlightenment. Stay savvy, and keep your money working for you.